Having a father like Dr. C.K. Narayan, who is the ultimate stock market guru of India, I think I was destined to enter the stock market. In the market, you are either trading like a pro or you are losing money. I was shocked to find out that you don't need to be a genius to be part of the 10%. You don't need to start with crores and crores and crores of capital to be part of that 10%. You just need to do three simple things. Hey guys, imagine this, a kid growing up in a household where conversations around stock market is more interesting than the latest Bollywood blockbuster. Yes guys, that's me. My name is Aditya Iyer and I am the co-founder of NeoTrader, and today I am going to share my story with all of you. I came from a family of stock market traders. My mother, father, brother, wife, everyone is a stock market traders. So the passion for stock markets and the passion for trading was inborn in me very, very early on. Our normal household conversations at home would be around stock market, where a regular household would have dinner conversations about Sachin Tendulkar making his new world record. In our house, we spoke about how Nifty made its new all-time high. So stock markets has been my whole life, and being the son and having a father like Dr. C.K. Narayan, who is the ultimate stock market guru of India, I think I was destined to enter the stock market myself. I learned trading, I learned technical analysis, and now fast forward 35 years later, I have earned the CMT designation. I'm a chartered market technician, which is the highest qualification for technical analysis in the world. I am a professional trader, and I'm also the CEO of NeoTrader, which is India's best software for trading and analysis. You know, people say trading is a very lonely profession. Traders are lonely. But that was not true for me, because everyone I knew and everyone I knew that existed was a trader. And even in my daily profession, I do a lot of seminars, webinars, conferences, expos, all centered around stock trading. So I got a chance to interact with a lot of traders. Okay, I've interacted with some of the biggest traders of India, and at the same time, I've also interacted with a lot of newcomers and upcoming traders. And I realized one thing very quickly after speaking to all of them. In the market, you are either trading like a pro or you are losing money. Let me tell you that once again. You are either trading like a pro or you're not trading at all. Why do I say that? Because trading is a zero-sum game. It means that if you have to win, somebody else has to lose, right? For every person who's made crores and crores and crores of rupees in trading, there's someone who's lost all of it. And that's not me. It is SEBI who says that in the market, 90% of the traders lose money and only 10% of the traders actually make money. Okay. And when I interacted with so many different traders, I found out that broadly you have traders in three different categories. Okay. The first category is what I like to call the struggling traders. These are those traders who are maybe new in the market. They are the guys who saw the allure of lifestyle or big money or whatever, and they've entered the market. They don't have a system or a process. They treat trading like gambling. They think market is a casino, and that's why these guys are loss-making traders and they are struggling in the market. Then there is another category of traders. Okay, these are those guys who are maybe trading for some time. These are those guys who are maybe following stock market experts on TV and taking their trades. Yes, it is all of you people who are scanning Telegram channel after Telegram channel looking for the next multi-bagger stocks, looking at the video of every other influencer hoping to get the next big stock tip. Okay, I like to call you guys survivors. Because hey, you do make money from the market sometimes, but then what happens? There is this big market crash and it takes away all the profits that you made and sends you gushing into losses. So once again, eventually, even the survivor is a loss-making trader. Now you will ask me, who the hell is making money in the markets anyway, right? Like I told you, SEBI said, 90% of the traders are losing money, but there are 10% of them who are making money. And this 10% is making all the money that the 90% is losing. And the people in this 10% are called successful traders. This is stage 3 when you become a professional trader. A professional trader makes money every single day, every single week, every single month. A professional trader knows exactly what stock to buy and what stock to sell. A successful trader is successful because they know when to enter and when to exit. And I know all of you people here want to become successful traders, right? And all of you people here want to enter into the 10%. I myself wanted to be part of the 10%. And what did I do? Okay, fortunately for me, because I came from a family of traders and because of the profession that I am in, I got access to the minds of a lot of successful traders, right? So I set out on the journey to interact with them, to learn from them, and to actually go in and understand how they trade. And you know what, guys? I was shocked. I was shocked to find out that you don't need to be a genius to be part of the 10%. You don't need to start with crores and crores and crores of capital to be part of that 10%. And neither do you need any sort of insider information or private information or illegal information to be successful. You just need to do 3 simple things. Yes, 3 basic fundamentals of trading you need to get right. And that is what I knew, and that is what I want to share today, starting from the very first one, which is creating a view for the market. When you want to start trading, the very first thing you need to do properly is to understand which way the market is going. And when I sat together with these professional traders, I saw that the only thing that they do at 9:15 is they sit down and they try to figure whether the market is bullish today or the market is bearish today. They know who is controlling the market, whether the bulls are controlling the market or the bears are controlling the market. The next question you'll ask me is, how do they do that? They follow something called the top-down approach. Now, what is a top-down approach? The top-down approach is a way of creating a market view. It gives you a helicopter view of the market so that you know exactly which way the market is going. So the very first thing that you need to do is you need to analyze the market as a whole. Okay. Once you analyze the market as a whole, the next thing that you do in the top-down approach is analyze the top 2 indexes, the Nifty and the Bank Nifty. You need to know which way the Nifty is going and which way the Bank Nifty is going. And once you've analyzed the index, the next thing that you need to analyze is the sectors. You need to go in and see what is the strongest sector for the day and what is the weakest sector for the day, and then you need to jump into your trade. Most normal traders don't do any of these analyses. They directly jump into the trade and they hope for success. Okay? You go and you buy a stock, and then later on you realize that the market is moving the other way. And even the sector that the stock is in is not performing. The stock that you buy should be from a rising sector in a rising market. So in short, the trend in the sector and the trend in the market should support your trade. It should not go against your trade, because the trend is your friend, and as long as you move along with the trend in the market, you are going to be on the right side of the trade. Okay, so that is the very first thing that you need to do if you want to become a professional trader. Create a market view. Then the second thing that I saw was that professional traders have a very clear system to identify what stock to buy and what stock not to buy. But it's a system where you can filter stocks every day. It's a system that can be repeatable day after day after day. And it's a system that helps them identify the most trended stocks every single time. Okay. And this is a system that we as a trader need to create for ourselves. And finally, a professional trader has very strict levels to enter and exit a stock. Even before they take a trade, they know exactly where they're going to get out. They know exactly where they're going to place their stop loss. And not only these levels, even the time frame of the trade is predefined. What does that mean? If you are taking an intraday trade, it is an intraday trade. It gets squared off at 3:30. Most traders take an intraday trade. If it doesn't work out, they take delivery of the stock, and eventually it gets converted into a long-term investment. That does not work in professional trading. You need to cut your losses fast. Cut your losses and let your profits run. Okay. putting a stop loss is a must, and putting a stop loss is very, very, very important. Okay. And I know why most of us don't put stop losses, because if we put a stop loss and if the stop loss gets triggered, we think we are wrong or we've made some mistakes. But treat trading like a business. Trading is a business and trading is a profession. Now, every business and every profession has income and expenses. Okay? So, when you treat trading as your business, the profits that you make is your income. At the same time, the stop loss that is getting triggered is the expense, right? It's not anything bad, it's not anything negative, it's just an expense that is needed to get your business going. And as long as you have more income than expenses, you become successful in business. Similarly, even when you're trading, as long as you have more winning trades than losing trades, and the size of your winners are bigger than the size of your losers, you are going to be successful in the game of trading and you are going to be a successful trader. When I understood this and when I started implementing this, it changed the way I trade forever. It helped me become a professional trader myself, and that is something that I've been following every single day, and it's been great. But you know what, guys? Trading is not always so simple. You know, you end up making mistakes. Markets evolve, and many times, even though we have all the principles with us, and even though we know what to do, mistakes happen. And we think that mistakes are happening because of our bad skills, but maybe the mistakes can also happen because the regime in the market has changed and we don't even realize it. This happened some time back. Pre-COVID, we had a totally different market scenario. And what happened post-COVID? There were millions and millions of new demat accounts that were opened. So many new traders have entered the market. Yeah? And the whole arena of trading has gone into a sea change. There was money coming in from educated people. There was money coming in from uneducated people. There was hot money, smart money, passive money, active money, all types of money entered the market. And what happened when so much new money entered the market? The speed of transactions in the market started increasing. And when the speed of these transactions started increasing, to cope up with that, there was a big advent of algo trading and machine trading. And when all of this happened, the total game of trading changed. It became fast, it became swift, and it became more and more challenging to adapt in this game. And I realized that if you have to adapt in this new era of trading, you need to be fast as well. See, earlier, say many years ago, people made money in the market through information asymmetry. Now, what does information asymmetry mean? Like earlier, stock market was a small club. There were people who would have, say, privileged access to certain information like a company's results or company's performance or whatever. They would get in early, and when the market discovered all of this information, they would make money. Okay? But today we are living in the world of social media where you can't even keep track of information, let alone control it. And what was getting discounted by the markets in a few weeks earlier is now happening within seconds. So we have to react very fast. And the only way you can do that is by adopting technology. And I realized that 90% of the traders in India don't have access to these technologies. Only sophisticated hedge funds have access to this technology. And that is when I decided enough is enough. I want to create something that can work in the new era of trading, in the new era of stock markets. And fortunately for me, because I came from a family of stock market traders, I got a chance to sit together with my father, with my brother, and poured into all the research that we had done as a company. Our company was in the market for more than 40 years. We went back and we analyzed every strategy. We saw what can work and what cannot work in the new market regime. Okay, I assimilated all the knowledge and all the learnings I got from all the professional traders that I spoke with, and finally created this one software called NeoTrader, which automatically helps me identify trades from the market. It automatically helps me analyze the market, and it even gives me ready-made trades. All I need to do now is put an entry, put a stop loss with one click, and the work is done. This has helped me react to the fast market, and you need such technologies if you want to adapt and if you want to respond to the market. See, trading happens in various levels. there is different types of trading that happens. You have intraday trading, you have multi-day or swing trading, options trading, or some of you might be doing investing. The founding principles for trading has not changed. Only the mediums have differed. Okay, the founding principles are what? News, fundamentals, technicals, price action, momentum, trends, all of this. But each of these founding principles impact each area of trading very differently. Okay, how the news may impact an intraday trader will be very different as to how it will impact an investor. Okay, so you need to process the data in such a way that it works for your style of trading. To conclude, finally, I will tell all of you that in this chaotic world of markets and in this tough world of markets, although it's a zero sum game, it is also an area of great opportunity. It's an area where you can get great learning, and it's an area where you can make tremendous wealth, not only for yourself, but also for the generations to come. In this new world, I will appeal to all of you to adopt the neo way of trading. Let us all embrace technology. Let us treat trading as a business. Let us treat trading like a profession and do things right. I am a neo trader and I wish all the best to all of you. And I want you to succeed in all your trading endeavors. And at the end, I would like to thank Josh Talks for inviting me to share my journey with all of you. Thank you very much.